Well, James, after trading below 7.20 against the dollar yesterday, the rand has weakened quite a bit this morning. To what extent do you think the pending World Bank loan for Eskom is weighing on the currency?
That certainly is the focal point today for the South African markets, is the World Bank loan to Eskom, and certainly that was definitely the reason the rand weakened off the strong 7-month level of 7.20. It hasn't got through there for 7 months, and certainly it's in the 7.30s at the moment, and all eyes will be looking towards the IMF loan decision of this evening, and depending on which way that goes, certainly the markets will react accordingly.
Why do you think so much attention is on that World Bank loan? What's the implication for the country if we don't get that loan?
There are some major implications if we don't get the loan. Firstly, our funding requirement will be impacted extremely, as we will still need to provide the power. So that will have effects on our capital markets, on the government bond and the funding requirements of the government. Obviously, economically, we are in desperate need of expansion on our power supply side. So if we don't get that, the economy will take a negative turn as well, and obviously that will feed through to the rand as well. So the currency will weaken. General sentiment will decline if that World Bank loan is not approved.
Well, we've seen that weakness coming through on the rand ahead of that announcement this evening. How has the bond market been reacting in the meantime?
The bond market has turned around from its close of around the 7.92 level on the benchmark R157 bond. It's currently trading in the upper 790s, around 798, 97 levels at the moment.
Now, if we do get that loan tonight, do you think we're going to see the rand heading back towards that 720 level, even possibly below that 720 level?
I think it will take a little bit more to get through the 720 level technically. Certainly sentiment will improve on the back of that, and we should drift stronger in rand terms against the dollar if that is approved this evening.
Why are we seeing such resistance at 720 for the rand? As you said, it's been bouncing off that level for the last 7 months now.
It's difficult to speculate. It's certainly a consolidation level, and whether or not there's any fundamental reason for it being at 720 is unclear, but it's obviously built itself up as a consolidation area, and that's pretty much where we are at the moment.
Perhaps looking a little more globally now, the euro, Greece back in the spotlight at the moment, and of course we do have the ECB meeting this afternoon deciding on interest rates. Do you think the market's going to be looking for some message about Greece in that ECB statement?
Exactly. I think that will be more the focus, the statement from Trichet, than the expectations with regard to monetary policy, broadly expected to maintain low interest rate levels of 1%. And the interesting part will be comments from Trichet with regards to Greece. Will they continue their quantitative easing policies? Also, collateral requirements. There is an expectation that there will be a mention easing collateral requirements of countries issuing loans, which will support Greece and their existing bond issuances as well.
Bank of England also deciding on interest rates today. Any attention going to be focused on them?
I think Bank of England's rates at the moment, given the pending election next month, there's very little expectation on any significant change with regards to the British economy.
We're just talking about interest rates. We had one of the Fed chairmen from Kansas City, in fact, Thomas Hoenig, yesterday saying if rates are being kept too low for too long, it could lead to more asset bubbles and also into some risky financial behavior. He's calling for interest rates to go up, but he seems to be at odds with the rest of the Federal Reserve, doesn't he?
That's right. I mean, it is a relevant comment. Keeping low rates where they are can lead to risky activities going forward, and asset bubbles have occurred as a result of low interest rate levels. But as you say, he's against the general consensus opinion of the Reserve Bank governors, which is to keep rates lower for an extended period in an attempt to stimulate the economy and impact the turnaround.
And of course, we still have unemployment sitting at 9.7% in the United States, and consumer demand for credit still very low. In fact, we had some figures out yesterday, and they appear to be quite disappointing.
That's right. The market was expecting an increase of $500 million US. It actually came out as a negative $11.5 billion, showing a decrease in credit demand by the American consumer. That could be attributed to a broader feeling by the consumer. We've seen increase in, or should I say rather, a decrease in house prices and foreclosures on the increase. And as a result, general household wealth levels are not on the up and up, and as a result, confidence in general has not been picking up as expected. So as a result, the demand for credit has dropped.